Bitcoin has been all over the news lately. It seems like it's constantly hitting new milestones, and it's definitely causing a lot of discussion, especially among investors.
It's been pretty fascinating to watch.
It really makes you wonder what's next for Bitcoin. Is this just a temporary thing? Or is it on its way to becoming a real established asset?
That's the big question everyone's trying to figure out. To understand where things might go, it helps to look at what's been happening in the market.
Definitely. So let's talk about that recent price jump. Bitcoin went over $100,000. A lot of people thought that would cause a huge sell-off.
There was a lot of talk about a correction happening soon. A lot of analysts expected people to start selling to cash in once Bitcoin hit that price.
But that didn't really happen.
Not as much as people predicted. The price went up and down a bit, and there were quite a few liquidations. But we didn't see a ton of investors pulling out like some people thought.
Can you explain those liquidations a bit more? For people who aren't super familiar with all the details of the crypto market, what does that actually mean?
Well, a liquidation happens when an exchange automatically closes a trader's leveraged position because they don't have enough money to cover potential losses. To put it simply, imagine someone borrows money to increase their bet on Bitcoin going up. If the price goes down instead of up and they don't have enough collateral, their position gets liquidated to stop them from losing even more money.
And we saw this happening as Bitcoin's price moved around that $100,000 mark.
Exactly. What's interesting is almost $1 billion worth of positions were liquidated. This might mean that a lot of traders weren't prepared for those price swings, and maybe they took on too much risk trying to make a quick profit.
That does sound like a pretty risky strategy. Do you think this wave of liquidations tells us anything about what's going on in the Bitcoin market right now?
It could be a sign that the type of people trading Bitcoin is changing. Maybe there's a new group of traders who are less experienced, who are jumping in because they don't want to miss out on potential gains.
That would make sense. With all the attention Bitcoin's getting in the news, I'm sure a lot of new people are getting interested.
Exactly. And while it's great to see more people interested in cryptocurrency, it's really important for them to understand the risks involved, especially leveraged trading. It can be very dangerous if you don't know what you're doing.
So you have these new traders who might be less experienced, plus you have more and more institutional investors showing interest. It's creating a really interesting picture of how the Bitcoin landscape is changing.
Definitely. The fact that these big institutions are getting involved, it brings a whole new set of factors to consider, and it could have a big impact on the future of Bitcoin.
Let's talk more about that. How do you think these institutional and government investments could change the world of cryptocurrency?
Well, we've already seen people like Michael Saylor and Anthony Scaramucci publicly saying they think Bitcoin is a good investment. And their opinions carry a lot of weight, especially in the financial world.
Saylor has been really vocal about it. He thinks companies should put some of their cash reserves into Bitcoin. He argues it's a much better store of value than the US dollar.
And Scaramucci thinks this recent price surge shows that Bitcoin is ready for big institutional investors. He thinks they've been waiting for a sign that Bitcoin is a serious asset class, and this price milestone, plus the fact that it's becoming more mainstream, could be what they were waiting for.
If these institutions do start putting a lot of money into Bitcoin, do you think that would lead to more people using cryptocurrencies in general?
It could definitely have that effect. When institutions get involved, it can bring more legitimacy and stability to the market, which it hasn't really had before, and that could make more individuals and businesses want to use cryptocurrencies for things like payments, investments, and other uses.
That brings us to regulation. Do you think more government oversight would make the crypto market more stable and trustworthy, especially in the United States?
Regulation is a complicated issue. There are potential pros and cons. On the one hand, having clear rules could provide some much-needed clarity and security, which could attract institutional investors who have been hesitant because of the lack of oversight.
Could make things fairer and more transparent for everyone?
Exactly, especially for exchanges in the US. Clear regulations could allow them to offer more crypto projects to the public, which could lead to more innovation and make crypto more accessible.
But too much regulation could stifle innovation and push those projects overseas, right?
That's the other side of the coin. If regulations are too strict, it could create obstacles for new projects and potentially slow down the development of the crypto ecosystem. Finding the right balance between encouraging innovation and protecting investors will be a big challenge for regulators going forward.
It sounds like cryptocurrency exchanges have a big part to play in this too, especially when it comes to vetting projects. and making sure they're legitimate in the long term.
Their role is absolutely crucial. Exchanges are like gatekeepers. They decide which projects investors have access to. The way they do their due diligence and vetting is really important for building trust in the market.
So they have a responsibility to make sure the projects they list meet certain standards of legitimacy and transparency.
Exactly. They need to carefully evaluate the technology behind a project, the team involved, and the project's overall potential to deliver what it promises.
Some people say we're still in a crypto winter after what happened with FTX. Do you think that's accurate?
Well, it's true that the FTX situation had a negative impact on the industry, and it definitely made some investors lose trust. But the fact that Bitcoin has not only recovered, but actually surpassed its previous all-time high, suggests that the market is resilient and adapting.
So you're saying this recent price surge could be a sign that we're coming out of that winter and entering a new phase of growth?
It's definitely possible. The renewed interest from institutional investors and the fact that more people are aware of cryptocurrencies could mean there's a bigger shift in how people feel about it.
But that doesn't necessarily mean Bitcoin is going to become a stable and predictable asset like a traditional stock, does it?
Not necessarily. It's important to remember that Bitcoin and cryptocurrencies in general are influenced by a unique set of factors. Their value is affected by supply and demand, technological advancements, regulatory developments, and overall market sentiment, all of which can be quite volatile.
So even though the long-term outlook might be positive, investors should still be prepared for some ups and downs.
Volatility is just part of being in an emerging market as the crypto market matures, as regulatory frameworks become clearer, and as exchanges improve their vetting processes. We might see that volatility decrease over time. But for now, it's still a key characteristic of this asset class.
That leads to an important question. What does all this mean for someone who is thinking about investing in Bitcoin? What advice would you give them?
Well, I'm not a financial advisor, so I can't give investment advice, but I can say that Bitcoin is a fascinating asset class with the potential for significant returns. But it's essential to approach it with a balanced perspective. You need to understand both the risks and the potential rewards.
So it requires a certain level of risk tolerance and a willingness to do your research before jumping in.
Absolutely. It's crucial to thoroughly research the technology, the market dynamics, and the potential pitfalls before investing any money in this asset class.
It seems like we're seeing a pivotal moment in the evolution of Bitcoin and the whole cryptocurrency space.
Definitely. The next few years will likely determine the direction of this technology and its impact on the global financial system. Their endorsements carry a lot of weight, particularly within the financial world.
And Scaramucci sees this recent surge as a sign that Bitcoin is ready for primetime institutional investment.
That's right. He believes that institutions have been waiting on the sidelines for a clear indication that Bitcoin is a viable asset class. This recent price milestone, coupled with growing mainstream acceptance, could be the catalyst they've been waiting for.
If institutions do start pouring money into Bitcoin, wouldn't that lead to wider adoption of cryptocurrencies in general?
It certainly has that potential. Institutional involvement could bring a level of legitimacy and stability to the market that has been lacking previously. This, in turn, could encourage more individuals and businesses to explore the possibilities of using cryptocurrencies for payments, investments, and other applications.
That brings us to the question of regulation. Do you think increased government oversight could foster a more stable and trustworthy crypto market, particularly in the United States?
Regulation is a complex issue with potential benefits and drawbacks. On the one hand, clear regulatory frameworks could provide much-needed clarity and security, attracting institutional investors who've been hesitant due to the current lack of oversight.
It could level the playing field and create a more transparent environment for everyone involved.
Exactly. Especially for U.S.-based exchanges, regulatory clarity could open doors to offering a wider range of crypto projects to the public, leading to greater innovation and accessibility.
But too much regulation could stifle innovation and drive projects overseas.
That's the other side of the coin. Overly stringent regulations could create barriers to entry for new projects, potentially hindering the development of the crypto ecosystem. Finding the right balance between fostering innovation and protecting investors will be a crucial challenge for regulators moving forward.
It seems like cryptocurrency exchanges have a significant role to play in this evolving landscape as well, especially when it comes to vetting projects and ensuring their long-term viability.
Their role is absolutely critical. Exchanges act as gatekeepers, curating the projects that are available to investors. Their due diligence and vetting processes are essential for building trust and confidence in the market.
So they have a responsibility to ensure that the projects they list meet certain standards of legitimacy and transparency.
Precisely, they need to carefully evaluate the underlying technology, the team behind the project, and the project's overall potential to deliver on its promises.
Some would argue that we're still in a crypto winter following the FTX collapse. Do you agree with that assessment?
While it's true that the FTX debacle had a chilling effect on the industry and eroded trust among some investors, the fact that Bitcoin has not only recovered but surpassed its previous all-time high suggests that the market is resilient and evolving.
So you're saying that this recent price surge could be a sign that we're emerging from that so-called winter and entering a new phase of growth?
That's certainly a possibility. The renewed interest from institutional investors and the growing awareness of cryptocurrencies among the general public could be indicators of a broader shift in sentiment.
But that doesn't necessarily mean that Bitcoin is on a straight path to becoming a stable and predictable asset like a blue-chip stock.
Not exactly. It's important to remember that Bitcoin and cryptocurrencies in general are driven by a unique set of factors. Their value is influenced by supply and demand dynamics, technological advancements, regulatory developments, and overall market sentiment, all of which can be quite volatile.
So while the long-term outlook may be positive, investors should still expect some bumps along the way.
Volatility is inherent to the nature of emerging markets as the crypto market matures, as regulatory frameworks become clearer, and as exchanges refine their vetting processes, we may see that volatility decrease over time. But for now, it remains a key characteristic of this asset class.
That leads to an important question, Rag. What does all of this mean for someone who is considering investing in Bitcoin? What advice would you give them?
As I am not a financial advisor, I can't offer investment advice. However, I can emphasize that Bitcoin is a fascinating asset class with the potential for significant returns. But it's essential to approach it with a balanced perspective, understand the risks as well as the potential rewards.
So it requires a certain tolerance for risk and a willingness to do your homework before diving in?
Absolutely. It's crucial to thoroughly research the underlying technology, the market dynamics, and the potential pitfalls before committing any capital to this asset class.
It seems like we're witnessing a pivotal moment in the evolution of Bitcoin and the broader cryptocurrency space.
Indeed, the next few years will likely be crucial in determining the trajectory of this technology and its impact on the global financial system.
It's certainly a fast-moving and complex world. As we wrap up our conversation, what's the most important thing our listeners should take away from this?
I think the main point is, even though the price has been going up and more institutional investors are getting involved, it's important to stay grounded. Bitcoin is still relatively new, and there are definitely risks as well as potential rewards.
It's amazing to see how far Bitcoin has come, from a fringe idea to something everyone's talking about.
It's been a remarkable journey, and it shows how important it is to stay open-minded and to recognize that the world of finance is always changing.
Looking ahead, what do you think about the role of governments and regulation in shaping the future of Bitcoin? Government regulation has the potential to have a big impact, if it's done well. Regulation could make the market more stable and legitimate, which could attract even more institutional investors. But if regulations are too strict or poorly designed, it could stifle innovation and push development to other countries that are more crypto-friendly.
So finding the right approach to regulation will be crucial for the long-term success of Bitcoin and other cryptocurrencies.
Absolutely. Finding that balance between encouraging innovation and protecting investors will be a major challenge for regulators around the world.
This has been a really insightful conversation. It's given us a lot to think about when it comes to this revolutionary technology.
It's been my pleasure.
For our listeners, we've just scratched the surface today. The world of Bitcoin is vast and constantly evolving. As you continue to explore, remember to stay informed, do your research, and carefully consider both the risks and the rewards before making any investment decisions. The future of Bitcoin is still being written, and understanding this dynamic landscape will be key as you navigate this ever-changing market.